So welcome everyone for this GTDC context session. This is the first one after the summer, and I'm sure you're all anxious to hear from Adam, how he sees the market, how Context see the market, and how distribution is performing. So in the next 40-45 minutes, we'll have Adam talking about the market and also market shortages, which we see. We'll do some polling, as you will find out from him in a minute. At the end, we have some time for questions. So before Adam, I'll hand over to Frank. Frank, you will tell a few things about what we're doing with the GTDC. So over to you.
Peter, thank you, and good afternoon, everybody. Happy to be on this call. As many of you know, we've said it a number of times. We started this series of calls, probably about, year and a half ago, in an effort to ensure that we could keep everybody abreast of what's happening as best we could. Certainly during the pandemic, it was really important, but I think it continues to be, because there's a lot of really good, relevant content that we're able to jointly share. As Peter said, Adam will go through a number of slides and talk about kind of what's happening in the marketplace, and we're all anxious to hear that. Before we do that, though, I want to just quickly talk to you for a minute about an upcoming event that we have. I think many of you are probably aware of it, but we have our GTDC forum coming up on November 3rd, and it's our 20th GTDC event. So we've been doing this for 20 years. This will be the second annual global virtual event that we're doing. And, it'll be 2.5 hours or so of content. And we'll talk to you about what's happening in the marketplace. There'll be a presentation on the emerging or the sort of the evolving role of distribution based on all of the transformative things that are happening in the marketplace. I think that'll be a really good session. I'll have a session with our executive committee, the CEOs of the leading distributors in GTDC, and then we'll have a number of really interesting breakout sessions that you can choose to go to. And then obviously you can go back and view them anytime. So we're really excited. We're looking forward to it. We would have loved for this next event to have been in person, as we've talked about to many of you before. Hopefully in 2022, we'll get back out to Europe and have a live and in-person event, because I know we're all anxious to do that. But in the interim, I'm really excited about the upcoming event, and I hope those of you that are on the call are first be aware of it, and then second would register and participate. So with that, let me turn it over to Adam, and Adam will take us through the interesting data that he usually does. Adam, it's all yours.
Thank you very much, Frank. Thank you, Peter. It's great to be here. So today I'm going to present 3 things. Now we are going to have a few questions. So just like previous times, if you put your smartphone up and get the QR identifier onto it, you'll be able to join the Slido. And if not, then just go on to slido.com, and the hashtag is GTDC 2021. So I'm going to talk about the Q3 actuals to date, July and August. I'm going to talk about product shortages, a very hot topic at the moment, and then end with a brief word about the outlook for Q3. Please use the chat if you've got any questions. And we'll have some time at the end for questions. So let's have a look and see. So I've shown this particular drawing to you for the last 9 times when we've done these presentations. And what you see is actually a bit of a flattening out of the growth. So this is 13-week index tracker by country using 2019 as the base data, all sales from the channel included in this. And what you would like to see is the upper level. You'd like to see as many of the countries above the green line and as few below the red line. So in fact, what you're actually seeing is quite a lot of countries that are below the activity of last year. Countries like Germany, France, they're below last year's activity. What we're actually seeing at the moment is a slowdown in activity, and it's really consumer driven, it's volume driven. Value is doing pretty well, but we're seeing that volume is down on previous year, which is not surprising because we know that the comparatives are pretty tough because last year was so good. But this is our index way of tracking what is going on in the market, and now I'll take you through a little bit more detail. So I think this slide really sums up very clearly what's going on. And so we're doing, in all our comparatives, we're using 2019 as well as 2020. And what you can see is month of July and month of August, growth of 8% and 9% against prior year, against 2019. When you look at it in terms of growth against 2020, you see 1% and -3%. So what's actually happening is that although the percentage growth is going up against 2019 in the month of August, the comparatives are that much harder for 2020. So in fact, it's going down against 2020. So that's why it's important to keep both of those measures in mind. When you break it down into volume and value, you can see that in fact, it is the volume that is actually down. So it's up significantly against 2019. These are eye-watering growth numbers, 9% and 13%, but it's down against 2020 for the reasons I've already described. What we see is a healthier picture on the value side, where we see that it's just about got back to 2019 levels and is above 2020. We've seen some really strong growth in things like data center networking. Software has been doing well, storage. The areas which have not been doing well is servers, and warranties and services have not been doing well. But in other areas of value, we are beginning to see that 2019 levels are being achieved. When you look at it on a country by country basis, you see that it's in fact the UK, which has been a big driver in this quarter. 11% growth in the month of July. This is all against 2020, and -3% in August. So that's still a lot better than countries like Italy and Spain, which have seen big plunges in July and August, driven particularly by the volume business. The other thing I would highlight is just how well the Nordics have been doing. Sweden's doing really well, Finland's doing really well, Denmark, and Norway, they're all doing really well. I saw a big smile on the face recently of one of the country managers from the Nordics. So they're having a good time. When we look at it on a product category level, these mountains represent big growth and the valleys represent decline. And this is what is going on against 2019. So we see some pretty tall mountains going on. This is the July and August 2020, 2021 against 2019. So you can see big growth, still 30% growth in mobile computing against 2019, still 36% in monitors, computing accessories, still 30%. So you can see big growth there going on. And we have to really keep that in mind. When we overlay onto that the 2020 picture, we see that the mountains have become more like hills. And there's one big new valley, which is the Telecoms Valley, and that's due to Apple making a decision to go direct with some of its phones. So that has really caused a decline, and you'll see later on the impact that has on the overall distribution numbers. So really it's flattened things out. What you do see is that, for example, desktop computing, which has a -17% against 2019, is in fact +7% against 2020. So that's a good news story there. I picked out some value categories just to show what's been fast growing in this period and what has been declining. You can see graphic cards on the value side have grown very significantly from 4 million in Q3 2020 to 25 million this in the first 2 months here. You can see that other big growth areas are switches. We've had some good growth in there. Warranties have done well. You can see growth of 48%. It's the services which represent quite a lot more of the revenues that have not done so well. And you'll see that's one of the top declining areas when I show the declining ones next. But warranties have actually done really well. Memory is doing well. Network expansion modules, of course, large format displays. When you look at the biggest drops, you can see other services. So we have a category, in fact, an industry sector we call warranties and services. It's split into two now. And you can see it's those other services which are really, really strong and have come down. Just to give you an idea about the quantum, I've got warranties is, let me get the numbers here. Now, other services is 400 million and warranties is 200 million. So you can see that that's why it has quite a big impact on the overall industry sector. And you can see some of those other declining areas there. So that's just to give you an insight into what are the top growing and declining areas there. Now I'm going to talk about product shortages. Well, it's really interesting this because I was hearing so much, we've all been hearing so much about product shortages. And I was beginning to think, well, how do we quantify this? What is actually the impact? How do we work out what is demand and what is product shortages? How big is it and all the rest of it? And then when Peter spoke to me, he said, Adam, do you think you could speak about product shortages today? So I've put together something on product shortages, but I thought before doing that, it would be really interesting to find out from you what you think. So I've got my first question, which is here, which is when will the chip shortage end? 2022, 2023, or after 2023? So some of the chip manufacturers have already made announcements about this. They've said what they think, but it'd be interesting to see what you think about it. Theo, are you able to see the Slido?
Yes, I can confirm everyone's seeing the live results as they're coming in.
Oh, fantastic. Oh, great. Okay. Good, good, good. That's good. It makes it more fun, doesn't it, when you can actually see what people are saying.
Absolutely.
Okay.
2022 currently in the lead.
Right. Okay, good. All right. Well, listen, I mean, what we're seeing is that 2022 is in the lead, and we're going to look at it later on. We're going to see the huge investments going into manufacturing additional capacity. Quite a lot of people 2023. I actually thought, well, TSMC have said 2023. Cisco have said it's probably going to be 2023. But I mean, it's somewhere between the two. But there's still some people who are a bit more pessimistic who say after 2023. So that's interesting. We will keep those results and then be able to put them in the final deck. Right. So let's move on to this. So I've got 4 points to raise about product shortages. The first is, well, the IT industry is worse hit than other industries. And the benchmark that I've used is the car industry. I was looking for some factual basis to see how bad the product shortage is elsewhere. And so I looked at the car industry. But compared to the car industry, the IT industry has done really, really well, much better in terms of results, growth, and in terms of its stock market evaluation, which I'm going to show to you. So in a way, the product shortage is a nice problem to have, not a really nice problem for all of you who are facing it, I know, and for customers, but it is the product of such amazing performance in the IT sector. So let's have a look at that in more detail. This is my benchmark. So I've got this study here, which is done by IHS Markit. They track the car industry. And in the 8 months to August 2021, 80 million cars were manufactured. They estimate, it is an estimate, that around about 5 million shortfall. There would have been 5 million more cars produced if there hadn't been the product shortages, which is a 6% shortfall. So I went to and did a straw poll with channel executives to ask them what percentage they felt the shortage was in the IT industry. And it was quite interesting. Now, this was a small sample. It was only a small number of people who were on a call that which we run at Context. But what came out from this is that I've ranked the different categories by the level of shortage above 15%. You can see that notebooks, the people responding, 68% of people said that there was more than 15% or more shortage. And it goes down to printers where it's 41%, but it's dramatic in notebooks. So I think that this is, in a sense, it's anecdotic because it's not a huge sample, but it does give you an idea of the type of percentages we're talking about. And when you hear various executives speaking, there was a very interesting article in a channel magazine in Spain last week, and the head of Lenovo in Spain said that Lenovo had stopped serving 30% of PC orders in the last year due to the shortage of processors and the boom in demand. So it's kind of in that region. And when I talk to retailers, they are really concerned about Q4 and how they're going to be able to service supply with consumers because of the shortage. One retailer said to me, it's going to be a bloodbath. I hope not. I hope it's all done in a civilized way. But you can see there is a level of anxiety which is actually facing the channel. But I do want to show that this is against the very amazing performance of the IT industry in the stock market, which I'm sure all of you are fully aware of. But we've been tracking the evolution of tech stocks in the last. In fact, we started doing it in September 2020. We did another review of it in May 21, and I've just updated it for this call today. And what you can see is 3 percentages there showing the percentage growth in stock value compared to September 2019, so pre the beginning of the COVID crisis. And what you can see is just how every industry has grown in terms of stock market valuation. Tech retail has slipped back a bit. That's Best Buy, which has come down a bit. Imaging has done well. Epson has gone up, as well as Brother since I last did it. Infrastructure, there's some increases there in various different vendors. Personal systems, a bit of profit taking on the likes of Lenovo, which has gone down, and a couple of others as well. And then headsets and webcams, the Logicoms and the GN Nord Jabra company, again, a little bit of profit taking there. So you can see those ones there. Then, of course, you look at the GAFAM, and there just seems to be no end of growth in the GAFAM. They represent 10% of all publicly quoted companies in the US, 4 trillion out of 40 trillion. And they've gone up since May again. So that's Google, Amazon has gone up the most, I think, and you can see this huge growth there. But then, of course, we have distribution. And since I last did the measure, distribution has gone up even further. It's now up at 226% growth in September 2019, driven very much, the Italians are the ones which have grown the most. So Esprinet and Computer Gross, they've grown by huge percentages. Computer Gross has just gone up. Esprinet was a slight dip recently, but I mean, still very significantly above their September 2019 valuations. Alzo has gone up again since May. The others have really held their ground, and Cinex has gone up as well. So you can see that distribution from that definitely undervalued as a sector, and people beginning to realize how important a sector it is. And then I've got there automobile, and you can see that automobile is lagging down there. It had definitely fallen back in September 2020 in the height of the crisis, but has picked up since then. But it's still nowhere near what the IT industry is like at all. And so really, when we talk about product shortage, it's important to put it into that context. And I have a little fun fact for you here, which is that technology makes all the difference, even in the automobile sector, because when you look at Tesla's share price in those 3 dates, you see most recently 1,473%. Whether that's sustainable or not, I don't know. There's going to be new competition for Tesla, doubtless, in the future. And another data point for distribution is the announcement yesterday of the, so this is breaking news, of the IPO of Exclusive Networks, valued potentially at 2.1 billion, which is a 0.72 of revenues and 19.5 times EBITDA, which is a very, very healthy rating against EBITDA, again showing the valuation which is felt to be possible in the distribution world. So let's talk about now the product shortages. Is it just a few products or is it everything? Well, we can see pretty clearly that anything that has a chip in it is impacted. So it's all product categories which are impacted by the shortage. And I love this. They're calling it Chipageddon, which is the situation that people are in. So we've got raw material prices going up. We've got 10 to 15% increase in component prices. We've heard TSMC has announced that they're putting their prices up by 10 to 20%. And the chip shortages, well, 2022, 2023, certainly going to last. And it covers not just processors, but screens and memories as well. And so we track this every month with our weeks of stock. So I thought I'd just share with you what this looks like. So what we have here is a sales index, which is the green line up on the top, which is measured against the left-hand vertical axis. You can see it going from 0 up to 250. This is notebooks. And then we have a weeks of stock, which is against the right-hand axis, starting at 0 and going up to 9 weeks of stock. And what you can see is that notebooks have been running at 2 weeks of stock pretty much during this crisis. And really, it's a mixed picture, because you get moments when there's an overstock situation. That happened at the end of June when there was one particular vendor had a bit of overstocking, but then that was sorted out. So you get quite a mixed picture. And then you've got this whole question about the shortage of consumer products versus business products as well. If you look at desktop, you can see that it's pretty stable now at around about 3 to 4 weeks. It did go through a much lower period. There was an overstocking earlier on in the year, but now it's pretty much stabilized. Germany is where the stocks are the tightest. Monitors are probably one of the hardest hit, but it's really interesting. Again, there's a lot of nuance in this. We are understanding that there is an oversupply of gaming monitors because of the choice to invest in that area of monitors, whereas there's a shortage in the business monitors, as our displays analyst recently presented. So it's quite an interesting nuance there to the low levels of stock we know which are there in monitors. And lastly, well, printers are pretty much have been operating at 0 stock. We only have German data for this, but it's been running at 0 stock for most of the last year. So we know that there is product shortage there. There's no question about it. So in that whole context of product shortages with impacting all categories, the third element really is that clarity is at a premium to avoid suboptimal decisions. It is not obvious to work out what is going on with these product shortages. And I'm going to share with you some of the different difficulties there are in knowing what is actually going on. So first of all, the quality of the order backlogs. There's a real question here about what quality those order backlogs are. There's the great phenomenon which took place, we all know, during the COVID crisis, of people going out and panic buying. And there's certainly an element of that which is taking place in the channel at the moment in terms of people buying up stock. So how good is it? When a vendor says, I've got 5 times the normal size of the backlog, how much is that real and how much is that people hedging their bets? The second question is underlying demand. What is the underlying demand? You know, we heard stories. The first story we heard was Israel. When Israel came out of the lockdown, we heard about this decline in the demand for consumer PCs because people were spending their money on other things. This has been confirmed in other countries as well. But what is the underlying demand? How much of what we're looking at is change in demand and how much is product shortage? And then we've got the prices, this whole question of how do we actually predict prices and know where to secure prices and which way they're going to go. And lastly, of course, there is the supply chain. So making sure the supply chain is robust. So this really translates into 2 big questions, which is, where do you place your bets? Do you go down betting on the solidity of demand of commercial, or that the consumer boom is going to continue? Do you go for the premium or the low-cost products? And I'm going to show you a couple of case studies which shows what has happened in the market. And then, of course, the other thing is, how do you manage the price uncertainty? Do you go for long or short-term contracting, and when and how do you pass this on to the end customer? So those are really the tough decisions which people are having to make, which have a big impact on success in this situation. So I share with you this case study, which is from a presentation done by Marie-Christine, our analyst on PCs that you all know. And Marie-Christine recently presented this, showing the difference between consumer-targeted PC volumes and business-targeted PC volumes. So this wasn't quite with the full August data, but what you can see very clearly, if you just take the early August 2021, it's very dramatic, minus 27% year on year on the consumer-targeted PCs, and plus 8% or 9% on the business-targeted PC volumes. So those business PCs, higher spec'd, where a lot of the investment has gone into, the supply is easier. The consumer ones, well, some reduction in demand, but definitely product shortage in that area. So you can see that the clarity in understanding what the underlying demand is, what those orders are, the backlog of orders are, is absolutely critical in this product shortage period. And I've got another one to show you, which is from the business monitors. This is showing an index with the top line is our panel of sale of monitors that are for end user business users. Sorry, the top one is the consumer and the bottom one is the business. And what you can see is how far above the consumer line is above the business in the early part of 2021, and how those two are really, really coming close together in terms of their activity. And so that's why making that call on which way you're going to go in terms of business or consumer is vital. Those types of decisions which take place over a long period of time, it's like changing the course of a super tanker, not easy to change short term. And lastly, there are the mitigating circumstances which we've got for this product shortage. And so there are really 3 things which mitigate the product shortage situation. The first is new investment in building new product. The second is the longer term prospects. And of course, the third is it has been compensated by stronger prices. And you get extraordinary moments like the Q2 printer numbers came in as minus 7% year on year in terms of units, and plus, I think it was 7% in terms of revenues. So we're getting these big increases in prices. which we track as well, and which I'll show you just to give an example about that. So in terms of investment, when you look around, you see that there is a lot of money that is going into the semiconductor industry, and also a change of approach. So we're moving more to a foundry approach rather than proprietary. Intel is going to be building chips for Qualcomm. They announced recently, in the last week, that they're spending 80 billion in the next 10 years in Europe, and there's a couple of new plants location not yet decided, which are going to be built in Europe. The US government passed a bipartisan bill, which was the Endless Frontier Act, 52 billion. I didn't get what period it was over, but this is all about de-risking the global production of semiconductors. And then TSMC announced that they were going to put 100 billion in the next 3 years into new capacity. So there really is a big change. It's not going to make an immediate difference, but maybe it will be the difference between 2022, 2023, and after 2023. And so here's just a view of what's going on in prices. I've got two indices there. One is ASP, that all of you know very well. That's the average selling price. The other is an index which you probably know a little bit less well, which we call the price index, which is purely a basket of all the products showing what has been sold and how the prices have evolved, completely excluding volume and mix. So this really is a pure measure of price. And if you look at Germany, what you can see, the wavy line of the ASP index is as they've sold more premium products, particularly in those periods when the low-cost products were not available. But what you see is a steady increase in the underlying price. And you see a similar picture in France. France is the country where we've seen the highest increase in the price of notebooks. And we see also the wavy line of the ASP. In the UK, you see a huge drop in the ASP, and in Spain in the period when the education notebooks were being sold through to government. And lastly, just to end off this, in terms of the product shortage, the mitigating factor is, of course, the long-term impact of this crisis. And I think that we can be pretty confident that there is a sustained demand for hardware. There's this whole change in education, and of course, digital transformation. There's a huge cloud cake out there. I know the distributors are really going for it, and they're trying to get their share of it. And that vendors are working with distributors to get that share of the market. The necessity for people to really be looking at innovation, and of course, public sector investment. My goodness, when you see the over €1 trillion that's going to be spent in Europe in the next few years with the EU recovery plan, a lot of that is going to go into IT. So all of this, I hope, puts our product shortage situation into context. And now I'm just going to end off with the Q3 outlook. So we've got another month to go. At the moment, we're looking at -1% July, August against the prior year. And we're forecasting 0.5%. So when we put together the forecast at the beginning, this is the history of the last years of quarters, starting with Q1 20. It peaked in Q1 21. It's got harder because of the comparatives. We forecast 3% for Q3, but we had an optimistic and a pessimistic scenario. So we said that 0.5 was our pessimistic scenario. And Q4 is a negative, but again, you know, let's just remember that a negative is a huge growth against 2019. So at the moment, we're looking at 0.4% growth in Q3 against prior year. I do want to highlight one very important thing, which is that the telecoms business, which I showed to you, that big valley, is having a big impact on the overall numbers for distribution. And that the growth in Q3 without telecoms, taking telecoms entirely out of our data, would be 2.9%. So it makes a big difference to the overall numbers, what we're talking about. So that's 2.9% on the back of a huge growth of 7%, 7.7% in the prior year. So this is the guidance. What you've got here is what we're saying by different key sector, and I call it the sanity check, which is putting in the 2019 numbers there. So a 0.4% growth in Q3 is an 8.2% growth against 2019. And what you can see is that a minus 1% in mobile computing is 35% against 2019. Infrastructure and security at the moment is running negative in the first 2 months. So it's a big month that we're expecting in September. We do expect a big catch up in software, in warranties and services, and in hardware as well. Software we're predicting at 6% at the moment. It made higher, it made 10% in Q2. I think there's probably more that can be done, and normally that's a big quarter end, big growth. Computing accessories and AV systems, they give the sense of what's happened to these consumer products. They are one-offs. People buy their headset, they buy the different mobile cameras, webcams, and things like that. So it doesn't necessarily have the long-term effect of, let's say, notebooks. And so what we're seeing there is a negative against 2020 in our prediction for Q3. So that completes my presentation, and it does leave a little bit of time if anyone has questions at all.
You show a very small increase in growth in the current quarter and also in Q4. Do you believe that if we wouldn't have the shortages, that the growth would be higher than this? So in other words, are the shortages impacting the growth, or are people shifting to other products?
One of the questions I was going to ask was actually, which I didn't get to put up through the Slido, was has the product shortage, does that lead to lost sales or delayed sales, or you just don't know? So it is a really interesting question that we all know that if you go into a grocery to buy bread and the grocer doesn't have it, that grocer has lost that revenue. You know, someone's going to go somewhere else. So I think that there's no doubt that the revenues will be higher if we didn't have the stock shortages. I mean, that's just absolutely clear. When you hear about the backlogs which are out there in the channel at the moment, if those backlogs could be fulfilled, I mean, if someone says 5 times the normal backlog, that means that is lost revenue. And, you know, some of the comments that have been made in channel press saying that people have had to wait for 6 months for products and things like that. So it would only be a gut feeling, but I would hope that anything that is business is just delayed. If it's consumer, you may have missed the boat because someone may decide to go and spend their money somewhere else, and that's what we're, you know, concerned about. Yes, so one of my questions was going to be, do you think that current order backlogs are overstated? And is it yes, no, or I don't know? Oh, right. Okay. I think, yeah, that looks like a big vote for yes.
The impact of product shortage and consumer products means.
So is it lost sales or delays? That's kind of one of the questions that you're asking, Peter, isn't it?
Yeah.
And we've split it into commercial and consumer products. So we are going to ask the same question about commercial products. Okay. Okay. Yeah. So I think that, I mean, it looks like the delayed, wow, gosh, it comes out pretty much equal, doesn't it? Equal, lost and delayed. I mean, I think there is that real risk on the consumer products. Yeah. Okay. Interesting. Okay, so let's see what you think about the commercial products. Ah, yeah. Okay. Well, I think we can breathe this. Well, I don't want to go too early, but yeah, I think we can breathe a bit of a sigh of relief. I think that that's just it. Businesses, there's no choice. They want to upgrade. They want to have the new stock. So we just have to have very, very good customer-facing people who deal with very irate customers saying, when is my stock going to come through? Okay. Great. Thank you, Theo, for doing that. That's terrific. Okay. So I don't know.
There's a few questions. Well, the one from Bob asking any news on the health of the channels.
Basically, corporate reseller channel is down on 2019 and also on 2020, which is a reflection of the value business still being in its recovery phase. Okay. SMB and all the others are healthy, and e-tailer, they're all healthy. Interestingly, retail is down against 2020. And what that means is that, you know, it's a reflection of the reduction of the consumer boom. And so retail is finding it harder this year. E-tail is still doing really well, but retail is down.
How do you see, or how do you vote that potentially it will impact your business due to product shortage? And out of that audience, 47% voted up to 5%, so lose out 5% of that business. 22% voted between the 5 and 10. So that might help this audience as well to understand where, you know, is this business shift or did you actually lose it?
Okay, well, if there's no more question, I think we need to wrap up. Well, first of all, I'd like to thank you all for attending, and Adam, you again, many thanks for all the insights. Really useful, I think. If you like those sessions, our next session is going to be on November 3rd, so it will be on our forum. So Adam will be one of the speakers there, and hope to see you all there.